Good afternoon, everybody. My name is Chris Burge, and I am the CEO of Spark Crowdfunding, and welcome to another of our investor webinars today. Today, we have got two great companies, both EIS companies, who are going to be presenting to us. The first one is going to be eStation, and the second one is going to be Galenband. But I just really wanted to kind of give you a little bit of an update on the Spark side of things. First of all, we've had a very, very busy November and December, showcasing seven businesses on our website. Two of which have closed in the last 24 hours, and another two closing in the next 24 hours as well. One tonight and one tomorrow night. The one closing tonight is a company called Epithel. And the one closing tomorrow night is X-Wave. Both overfunding already. Both excellent EIS businesses, and definitely worth a look at if you haven't already had a quick look at them. So please do so. But today is all about eStation and Galenband. So what I'd like to do is invite Eamonn to start his camera, and I'll just give you a quick introduction. So Eamonn McSweeney is the MD and co-founder of eStation. Eamonn, you're very welcome. Eamonn is an alumni of UCD, having done a Masters of Economics there, not yesterday or the day before, but no, a few years ago, but nevertheless, but has been in charge and at the helm of eStation for the last 9 or so years. eStation is a B2B business that looks after the e-charging or charging of the electric fleet of vehicles. Having got a number of businesses under their wing, such as Ampost and DHL, they produce an ecosystem where they can seamlessly charge vehicles using the best rate and making sure that it's all being done through the business as opposed to individually with reclaim backs. And I'll let Eamonn go into that in more detail. But their valuation is 6 million. They expect to do revenues of 5 million by the close of this by the year end, which is June of next year. So really, it's a business that has got a brilliant ratio of turnover to valuation. But I'll let Eamonn explain all of that during his presentation. So Eamonn, you're very welcome. Please, would you start your presentation, and I'll go quiet, and I'll let you introduce the business in more detail.
Yeah. Okay, so hopefully that's on screen now.
It's coming. There we go. Perfect.
Yeah, super. Okay.
Okay.
Okay, so eStation, what we're about is basically we help companies transition their fleets from petrol and diesel to electric. So that basically involves facilitating charging at the only 3 places you can do it. You're either charging at home, at work, or out in public. So we facilitate companies to allow their vehicles to charge in all those environments. We provide the hardware services, which is the equipment itself, and then the software services that allow for the measuring, monitoring, and monetization of EV charging in those 3 locations: home, work, and public. So the challenge for businesses, I guess, is a lot of businesses now have a part of their ESG is obviously to reduce carbon footprint. Low-hanging fruit would be electrifying their fleets, but the I suppose challenge there is to not only to transition to EV fleet from an ESG point of view, but to realize the savings that are available, and the savings are substantial. But to do that, there are a number of things that have to happen, and really it's all about charging in a smart way, and that involves maximizing the charging where electricity is cheapest. So that's what we try to do for businesses, is allow them realize those savings fully. The target market, so the market has been growing. When we started in 2015, it was very small. In the year that we're just finished, the financial year of June 2024, the sizable market for us, the obtainable market, was 54 million. We did a turnover of 2.5 million. That market would be the hardware, the equipment installation, software services, and charging in public. So the market's growing all the time. It's expected to get to 895 million in Ireland by 2030. So an awful lot of growth there yet to go. Most companies are very much in the early infant stages of transition to EV, and that journey is 4 or 5 years. And as they adapt to new technology coming along, there's a constant requirement to churn the solutions or enhance their solutions as they move through that process. So the solution we offer, as I say, it's hardware and software. So we do the entire installation process. So it's complete turnkey. We scope out the requirements. We assess their electrical infrastructure, what in its current state it can feed, what electrical infrastructure they might need in order to feed a future fleet, and it's to size all of that, the equipment, the infrastructure to feed that equipment, and then it's to provide the ongoing software services and support level agreements in place also to manage and maintain that equipment over its lifetime, which could be anything from 7 to 10 years. So it's a complete turnkey solution. We provide all of that for customers, and basically it allows them to transition in a managed way and with no real problems, and to realise those savings that we speak about at the outset. So the business model is, again, it's for the installation services, so that's obviously a one-off, but then we have our SaaS agreements, and we have nearly 50 customers signed up for SaaS agreements, which is obviously software as a service, so they pay an annual fee. We've a number of different type SaaS solutions based on different needs of customers. We signed our first SaaS customer in 2018, and we've continued, as I say, we've got up to 50 now, and we haven't lost one yet. So once we get them, they tend to stay. So our customers are sticky in that regard. And as their fleets grow, obviously their SaaS requirements grow. So it's an ever expanding model with our existing customer base and as new customers come on board. In terms of traction and validation of what we do, in the last couple of years, we've had a couple of very big wins. DHL was one that a project finished last year across 5 depots in Ireland. They're in the first phase of transitioning their fleet, which was about 80 vehicles, and it involved us putting infrastructure in place in both their in 5 of their depots for the vans, which reside at the depots overnight. It's also for executive staff who are taking vehicles at home. We provide charging at home for them, and we manage the measurement of that home charging activity, and also the reimbursement, because when people are charging at home, if it's a company vehicle, it's out of their own pocket, so they need to be reimbursed. So we manage all that. And then we have charges in the workplace for staff to use who are in company vehicles. Staff can also use it if they're in private vehicles, and visitors can use it as well. And it's a blend of AC and DC charging. DC charging, for anyone who knows or has an EV, will know it's the faster charger. It's much more complex equipment. It's more expensive equipment. But a company of DHL size is scaling out both AC and DC charging across 5 locations in Ireland. Sorry, just to An Post is the other one that was a win this year. So An Post has got the biggest fleet of electric vehicles in Ireland. It's currently around just over 1,200. They plan to double that in the next 15 months. And they're putting chargers in the depots. They have some chargers already, which we manage, and then we're installing a whole range of new chargers at depot locations and providing all our SaaS services again around managing and supporting that equipment. One of the big things we've always sought to do is understand where the technology is going. Europe's probably 4 or 5 years ahead of Ireland, so we've always spent time looking at what's happening in Europe, because whatever you see there, and beyond, I would say China as well, of course, but we would look to apply, or at least prepare for the technology that's coming down the tracks, and introduce means to accommodate that technology and take advantage of that technology for companies. So always looking ahead and making sure that our equipment, the solutions that we're putting in today, can accommodate the technology coming down the tracks. And I suppose the ones we're talking about, the big one coming along next in the next 15, 18 months would be plug and charge, whereby the authentication between the charger and the vehicle happens between the charger and the vehicle. There's no need for RFID card or anything like that. So we have to program chargers to be able to recognize the vehicle. From a convenience point of view, that's a huge step forward for our users, because they just plug in the car, and the car, once it's recognized as being a valid user, can charge away. So the chargers that we install today are ready for that. The other big innovation that's coming down the line is bidirectional chargers. And this sort of feeds into the whole energy management space for businesses, whereby the electric vehicle becomes a component of their energy management strategy. So not only does the charger feed electricity into the car, but the car can push the electricity back through the charger into the home, into the business, back onto the grid, etc. And as rates for electricity move around and become more fluid over a 24-hour period, The ability to manage that in a more controlled and smart way can enable companies to realize further savings or actually generate revenue from utilizing static vehicles that are charged up. So we're always trying to work with the new technology as it comes along to make sure we have that available for our customers. The core team is myself, my brother Mark McSweeney, Glenn Frawley, and Alan Gaynor. We're all experienced. We've been in business. We've grown businesses of various different types over the years. We've a lot of experience in delivery of projects, in the delivery of software services. So we are well placed to grow the business based on the ambitions we have in the next 3 to 4 years. The financials, as mentioned, were our turnover at the end of June 2024 was 2.5 million. We expect to double that in the current financial year. 80% of our customers are signed up for our SaaS services. So that is the software services, and we see that as a real growth. We have other technology enhancements. We have an app coming out in the new year that will allow the general public to charge on multiple charge point providers here in Ireland. The obvious ones would be ESB, but there's also Ionity and others out there in the marketplace. And via our app, users can access those chargers. So we expect we have several means for the business to grow in the coming years. Competition out there. So we're in business since 2015. It was a very small competitive space back at that time. So we're in business 10 years. Our main competitors will be EasyGo and ePower. Some of you may be familiar with those names. They would offer some services that we offer, but we would see ourselves have a unique overall offering. So whilst those companies have gained traction themselves, we see a lot of growth for ourselves based on the leverage we've had with large corporates, and we're very much gearing ourselves or aiming towards the corporate market who have quite sophisticated needs in terms of the electrification that they're going through. The investment, as Chris mentioned, we're looking at a total of 1.75 million, 500 of which is through Spark. We've been successful in getting over 1 million of that already. We've very clear plans on what to utilize that money for, and we're ready to trigger that as soon as we have everything in place. Our exit strategy we would hope that it within the next 5 years that we would be able to sell the company. We think our customer base is going to be a big feature in enabling us to do that. Our customers are with us for the long term. As I mentioned before, we've yet to lose a customer. Any customer we've brought on board has stayed with us. So we have proven solutions that work, that customers like, and we're always looking to enhance and add to those services based on new technology that comes down the track. So we expect to retain our existing customer base and obviously grow out that customer base as well. So we would see that as a big factor in any company looking to acquire eStation. Our SaaS services will be a big component of that, and also our maintenance, our service level agreements that we have with customers, which is a good solid recurring revenue. So that's it. So an experienced team, a proven track record. We've got customers that prove our solutions work, and electrification is here to stay. EVs are here, whether people like it or not. There was some resistance in the early days, but you can't push back the tide. EVs are here, and we think we're very, very well positioned to capitalize on the adoption of EVs in Ireland, which is still in its early stages. The ambition of the government is to have over 1 million vehicles by 2030. We're not going to get near that, but at the moment they're only at 100,000 and aim high. But it is happening. We're seeing it all the time, and we have new customers approaching us all the time with their plans and intentions around electrification. So we see a very bright future, and I think that is it.
Excellent. Eamonn, thank you very much indeed. That was very useful. I think everybody can see that this is a market that can only grow, really. And obviously, as more and more fleets get into the business model, they will need solutions in order to actually manage the fleet, not only just the charging levels, but also the cost around that as well. And you provide a very neat solution for that. So just to remind everybody to please put your questions into the Q&A. We've already got a number in here already, and we will crack on with that. So Eamonn, please do stay there for a second. If you've, I don't know whether hopefully you're still there. Hopefully you've not disappeared. You've got questions to answer here. There we go. Right. Okay. First one. is from one of our investors. What sets eStation apart from other e-charging solution providers?
Well, I think it's our end-to-end approach anyway, for a start. So we have a lot of experience within the team anyway for delivery projects, and our customers, particularly large businesses, their requirements are quite sophisticated. So from a project delivery point of view, there's a lot involved there before we even put a charger on the ground. There's a lot of assessment around electrical infrastructure that's in place, assessing what their fleet ambitions are and what they need to feed that. Whether vehicles are staying at the business overnight, whether they're going home, etc. So it's to basically assess how the vehicles are being used, what kind of mileage they're doing each day, and coming up with an outline of what infrastructure they will need to minimize the costs to the business to get that infrastructure in place, but then to maximize the savings from running the electric vehicles. So that's the first part. So it's very much project delivery, complex project delivery. And then it would be around our software services, I would say. So our services have evolved over a 6-7 year period, and it's been very much driven by customers' needs. And every customer's needs are slightly different, slightly nuanced. And we've always sought to listen to the customers and then also find what the latest technology is in place right now, what's coming down the tracks, and always plan to be able to integrate that technology into our solution. So we always want our solutions to be scalable and adaptable to what's coming down the road. And we make sure we do that. So we've always remained product agnostic. We're not tied in with any one manufacturer. We look at product everywhere. We utilize some off-the-shelf software. We do our own enhancements to software. And it's always around trying to understand the needs of the customer, to anticipate needs that they may not have identified already, and to provide the tools which will allow them to make the transition as smooth as possible, but also ultimately realize that goal of the dramatic savings that are available from running an EV fleet. But if it's not done right, those savings will never be achieved, or they'll never be realized to the extent that they can. So it's that complete overview of the entire ecosystem and where EVs sit within an overall energy management picture. I think we're unique in that respect.
Very good. Melissa.
Great, thanks, Eamonn. There. Another question on the financials of the company: is the business profitable?
Yes, it is. It is. Any money we've made, we've always sought to reinvest in the company as well. I would say that, whether that's in software, in marketing and sales promotion, etc. But the company is profitable. But what we found a big challenge with we always had was having enough money to keep up with the growth, because the growth was happening and it was just having the money to keep up with that. So that was always our challenge, hence our requirement to get funding in place. But the company does make money.
Great.
Good.
Okay.
Okay. Next question is, what sort of company could acquire eStation?
Oh, it could be a utility company. It could be a competitor in the space. It could be a company from the UK. We have, we've been contacted by companies in the past who are interested in getting in this space. Companies that operate in Europe. It could be a manufacturer who are broadening their services as well. So there are a lot of companies hovering around this area. So it wouldn't be a particularly narrow field. But we have been contacted previously, so we know there's an appetite out there.
Very good.
Right, thank you. Another question in from an investor is: in 2 to 3 years' time, what percentage of revenues would you expect to be recurring monthly / annually?
I would say we would expect that to be 20 to 30% of revenues. We would expect to be recurring, at least. And that would be around SLAs. So obviously the physical maintenance support and remote diagnostics around equipment, and also our SaaS services.
Very good. How does eStation's end-to-end solution integrate hardware and software to simplify the fleet management then for the customers?
Well, so the main thing with all the hardware we install is SIM enabled. That's the fundamental with our equipment. So we have to be able to communicate with it. And then it's just a question of how we utilize the data that we get from those chargers, and how we steer or guide the companies as to how to manage those fleets to maximize their savings. So it's around using the software to analyze the data that we're getting from our hardware, And it's using, as I say, existing software that's available, but also creating our own enhancements to software to make the management of the transactions, the management of payments, etc., more accurate. So it's integrating what's available in the market with the equipment we install to make sure that we can offer the full flexibility and control that's needed to achieve savings.
Very good.
Eamonn, this one kind of continues on from what you were saying there, but one of our investors is asking, how does eStation ensure reliability and support for customers?
Yeah, so well, again, part of that would be the remote diagnostics. So because they're all SIM enabled, we can always see. We've 24/7 view of the chargers. We have a monitoring center in our office, so we have access to chargers all the time. But we've also developed some of our own hardware devices for remote monitoring, and we can do resets, and we can remotely control and reset equipment as well. So the ultimate objective, and as you can appreciate, some of our customers, the likes of DHL and On Post, people coming to work on a Monday morning and the vehicle not being charged is not a runner. It's not an option. So, we would have remote diagnostics. We would have the ability to reset equipment remotely. We would have alarms set up that alert us as soon as there's an issue with charges. And then it's around the reliability of the equipment as well. So we would test rigorously all the equipment we install. They're all from proven providers. We've worked with many different companies, but we would always test the equipment thoroughly before putting it out in the field. But really, it's about the connectivity and constantly monitoring equipment and having a plan in place of how to address it when problems occur. And problems do occur now and again. Sometimes they're within our control, sometimes they're outside of our control, but it's speed of response to that.
Sure. Great, thank you.
Good. Is there any route to eStation becoming a pure play SaaS company? And the continuation to that is the hardware a big drag on the gross margin that you have and limiting valuation multiples?
I don't think so. The hardware is the kind of Trojan horse in a sense for the software services. So we have to have the hardware in there. But I mean, there's good margin on the hardware, what we find. And the other thing with the hardware is, as the technology changes, there's a requirement to churn the hardware. Charging equipment that's looked after well and maintained well can last 5, 7, 10 years. But technology moves on. Bidirectional charging is going to be a big feature. So the hardware is always going to be a significant component that will drive the software services, and it'll determine the nature of the software services. So to me, they go hand in glove. But I think as companies' needs become more complex, particularly when we get into the space of energy management around vehicle to grid, vehicle to home, vehicle to business, etc., the needs are going to become more complicated at that point. And I think the spend on software services as a consequence the software services will be more complex and the cost to provide them will be higher. So I think the ratio of our SaaS services to hardware will increase. The SaaS will increase. Whether to say it will be pure SaaS, I don't think so. How we price it could evolve, because the price of the hardware could evolve whereby it's part of the annualized SaaS offering, if that makes sense. So there's definitely scope for that.
But I guess as the charging points become more ubiquitous across the country by people just putting them in, does that mean that the hardware sales from your side starts to drop off a bit, or do you still think that you'll still need to be providing that as well?
I think we'll need to be providing that. I mean, what we've seen in terms of how the technology has moved on, what was very much fit for purpose 2-3 years ago, now seems very, very dated in terms of speed of output. Other things like that, connectivity. The kind of remote connectivity things you can do remotely with chargers. But again, I would say, ultimately, the charger is going to be a key component of a much broader energy management ecosystem. So I think there will always be an evolution of the types of chargers to fit in with that.
Very good. Lisa?
Another question, Eamonn. Revenue growth rates are currently 100% moving into 2025. So what growth rates would you expect over the following 3 years after 2025?
Well, our growth, it's been doubling year on year for the last 4 years, and we expect that, in the current year we're looking to do that, and the year after. We don't expect to do that every year, but we do have fairly aggressive growth plans, and we have a very clear plan as to the personnel we need to deliver that, and also the services we need to develop and enhance to deliver that. So we do expect it to continue at a fairly dramatic growth rate, in line with how we see the adoption of EVs happening as well. Because as I mentioned before, Ireland is still very much in the early stages of this. And particularly with businesses as well now, what's becoming available now, which hasn't really been there up to date, is a good, light commercial vehicles are really now becoming suitable for businesses where they weren't up till recently. So I think there's going to be a big bounce with businesses there that use light commercial vehicles, that there's viable electric options in that space, and those businesses are going to need complex management of that.
Very good. Okay, we've got time for one more, I think. So you've an institutional investor investing 1 million in this round. What would you say were the key reasons driving their interest and the exit multiples they expect?
Well, I think, you know, they spent a lot of time analysing the company, obviously. I think they liked the drivers of the business, the drivers behind the business, the team, but how also our services have evolved over that time, how we've developed our software services, and how we've managed to continually bring on big ticket customers who are very much gravitating to the services that we were able to offer. So that was a big part of it. I think our ability to change and grow and adapt to the challenges that were being presented to our customers. And I think the multiples that BVP would see would be in line with the ones that have been expressed by yourselves anyway. So very good.
One last one that's just come in. What is the current monthly non-hardware income?
Oh, can I come back on that one, Chris?
Yeah, you can take that offline. Yeah, I know that's probably possibly commercially sensitive. So yeah, happy to answer that one. But okay, well, listen, Eamonn, thank you very much for that. That was very educational, and hopefully our investors found so too. The valuation of 6 million, obviously with the 35% EWIS discount, takes that down to an effective 4 million, basically, which is very for a company who's going to be turning over 5 million this year is a very nice inducement into investing in the business. So let's hope a lot more can come in. But Eamonn, for the moment, thank you very much indeed, and we'll ask you to switch off your camera, and we'll introduce you to Galenband now.
Thank you, Eamonn.
Cheers. Thanks, Eamonn. Thank you, Melissa, as well. Eddie, welcome to the webinar, and Oisin, welcome yourself as well. So I'll just do a quick introduction to you both. Oisin, sorry, first of all, Eddie, you have a BCom from Galway and also an MBS from Galway. But you've already kind of worked in a number of startups before and had some nice exits over the time as well. So that's a quick, very potted history of yourself. Oisin, you are an alumni also of Galway, having done biomed engineering there, of course, and also gone on to do some a program at MIT, which was obviously very useful and useful for the work that you do in Galenband now as well. And before that was a research fellow at Galway as well. So we have the CEO with Eddie of Galenband and the CTO obviously of Galenband here. Galenband themselves have developed a very nice piece of medical technology that monitors the heart rhythm, and this is replacing the Holter monitor that has been used up until this point, and a couple of other additional pieces of equipment as well. And the Holter monitor, for those of you who may have used one or come across them before, is where you stick all of these electrodes over your chest in order to actually monitor, which are very cumbersome, and you can't really do long-term monitoring. But what Galenband have designed is an arm-worn piece of technology that actually can track this over numbers of days and even weeks and months as well. And that's what they're in the process of developing into a more rounded product, which they've made some massive inroads to as well. So maybe I can get you to introduce yourselves and the business in a little bit more detail with your presentation, and I will see you for some questions and answers afterwards as well. So again, guys, if you've got any, the investors this is, if you've got any questions, please enter them into the Q&A, and we will fire them onto Oisin and to Eddie in a 10 or 12 minutes time. So guys, away you go. Thank you very much.
Fantastic. Thank you very much, Chris. So I'm Eddie McDaid, CEO and co-founder of Galenband, which is a unique heart rhythm monitoring platform that addresses an unmet clinical need around diagnosing intermittent heart arrhythmias through long-term monitoring. As Chris mentioned, I'm joined by my co-founder and CTO, Oisin McGrath. I've previously founded and led 2 high-growth digital platform businesses in the Internet of Things arena, and Oisin is a biomedical engineer and the inventor of Galenband. So atrial fibrillation, or AFib, is the most common heart rhythm abnormality. Up to 90% of it is asymptomatic and intermittent, and hence extremely difficult to detect. 25% of over 40s will develop it, burdening them with a 5 times greater risk of stroke. And in patients who have a stroke, 26% of them experience stroke recurrence due to undiagnosed AFib. And so why is that a problem? Well, there are basically 3 styles of cardiac monitoring today that are relevant for intermittent arrhythmias. The first is wristwatches or handheld devices. The problem with those is that they require you to form a circuit with your other hand. So they're manually operated and you use them for a short period of time. They're typically not used for screening. They're used in reaction to feeling some kind of symptom. And so where we're looking at things that are intermittent and symptomless, they're never really used for that purpose. They also tend to be consumer devices, not medical diagnostic devices. Then you have the adhesive technologies such as Holter monitors and patches. These are also short-term in nature. Holter monitors are prescribed for 1 or 2 days. Patches up to 14 days. They tend to fall off after 10 days. Both of them restrict your everyday activities. You can't take a bath with these things on, for instance, or any kind of rigorous exercise, and they often create skin sensitivity and discomfort. Surgically implanted ECGs are fantastic in that they will have a very high detection rate, but they come at a very significant cost. In the US, they cost up to $30,000 per implantable device. They also generate data for years, which isn't necessarily what the medical community wants. So we have adhesive patches that have adhesive technologies which have low detection rates, implantables that have high detection rates, and the upshot of that is that there really is an unmet clinical need arising from the short-term nature of these adhesive monitors, which means that up to 80% of stroke patients receive inadequate monitoring in order to identify AFib and prevent stroke recurrence. So our mission at Galenband is to unlock effective treatment pathways for patients with our long-term continuous convenient heart rhythm monitor. Galenband solves the problem of long-term monitoring by providing doctors with a convenient wearable diagnostic that far surpasses these adhesive technologies. Our device, it's worn on the upper left arm. It collects ECG data passively and continuously for up to 3 months, enabling reliable detection of intermittent heart rhythm problems. And it has no requirement for wires, adhesives, charging, or syncing with phone apps. Our initial patient pathway is post-stroke. This is a cohort of patients who are poorly served by current diagnostic technologies. As I mentioned, short-term adhesives and Holter patches are really unsuited to post-stroke AFib detection because they have such low detection yields. So you can see at the bottom of this graph, which is showing you the rate of detection of AFib over time, that red portion at the bottom is the yield that you're getting from Holters and patches. So in and around 10% for a patch due to the fact that they're only sticking on for 10 days. At the other end of the graph, you have implantables, which will find all of the AFib that patients have, but at a cost of $30,000 and often with a very long waiting list, which isn't convenient for patients. And so what we're doing with Galenband is that we are bridging the gap between these adhesive technologies, which are not really suited for intermittent monitoring, and the implantables, which come with their own disadvantages. And we're doing that for 1/10 of the cost of an implantable monitor.
Galenband's upper arm design enables diagnostic quality ECG to be recorded over extended durations passively, which is a game-changing differentiation versus consumer-oriented wrist-worn ECG, which, as Eddie mentioned, requires a circuit to be formed with the other hand and limits the recording duration to about 30 seconds, sub 1 minute anyway. They're not medical devices. They're generally not used to form diagnoses. If a patient attends a clinician saying that their Apple Watch or Fitbit or a consumer device has detected an abnormality, the clinician then often will prescribe a diagnostic device in order to establish what the problem is with specificity and then formulate a pathway of care. Galenband is a discrete diagnostic that doesn't impact everyday activities. It's increasing arrhythmia detection with monitoring periods that really can't be rivaled by adhesive devices. And this is a problem that's important to me personally, because I spent 13 years trying to get a diagnosis, and I had 11 failed monitoring attempts, just eventually needing surgery then to get a diagnosis. And I thought, there's got to be a better way to do this. So here we are now with a technology that could have cut that time down to 3 months without any need for surgery. We completed a clinical study at Beacon Hospital in Dublin in July, which compared Galenband to hospital telemetry ECG. Participants in that study were recorded simultaneously by both devices, which enabled a beat-to-beat comparison. And that study then validated Galenband's diagnostic performance with really excellent results. The green circle here highlights a P wave, and that's one of 2 key criteria that clinicians need to be able to reliably determine the presence or absence of in order to make a diagnosis of AFib, and the other is the regularity of the rhythm. Galenband was able to detect that feature with exceptional accuracy, with cardiologists from Harvard Medical School reviewing our data and being comfortable that they could take clinical action on the basis of the quality. Eddie.
So our target market is arrhythmia monitoring, and within that, we focus on intermittent arrhythmia. That is a 3.1 billion euro opportunity in its own right, and of that, 894 million relates to post-stroke AFib monitoring. Our beachhead will be acute stroke clinics in the US, where we will target patients at high volume clinics, and we will work with clinics that are partnering with independent diagnostic testing facilities, which are used by hospitals to outsource monitoring away from the setting of hospital provision.
We've conducted a pre-submission meeting with the FDA, which has confirmed our regulatory pathways, a standard 510K. It also clarified clinical testing requirements. The FDA are requiring a modest, it's a 50-person comparison with 24-hour Holter. We've also commissioned a reimbursement landscape analysis, which has identified existing insurance codes in the US that apply to Galenband's offering, and they reimburse for 775 euros per 30-day period. We're offering an attractive workflow for arrhythmia detection. Clinicians prescribe devices and then they consume reports via a cloud portal. We send a device to patients, patients wear it, and then the cloud portal notifies clinicians in a timely manner if an arrhythmia is present. The devices are then sent back to Galenband. They can be sanitized and then redeployed to new patients. So that device reuse is sustainable, but it's also highly profitable. The workflow itself is already established and it's in widespread use by patch operators who operate in the market already.
Our team has deep experience in the medtech and digital platform arenas, and we're supported by an advisory board with prior exits, strong academic, clinical, and commercial track records from organizations such as Harvard, MIT, Stanford, and Abbott Medical. Looking to our milestones in this seed round timeframe, we're going to collect 2 additional sets of study data. One will be a comparison versus halter in the early part of the year, and the second will be a comparison versus adhesive patches in the latter part of the year. That will be a longer running period of time where the patients are wearing the device, and that will lead us to design freeze at the end of the year and readiness for our FDA study, which will take place in early 26. Okay, if you go to the next one then, Oisin, thanks. So looking at the exit opportunities here, you know, in this market, we've seen a track record of exits taking place at various points of the kind of milestones that we've set out. Some happen before clearance, some are happening at clearance, and some are happening obviously as market entry takes place, both early and later stage. We think that there is a good opportunity to have conversations around M&A with strategics at the point of FDA clearance. Our preferred exit would be to a strategic buyer at that point. And we have a very attractive valuation now, leading to a seed round at the end of next year, which will build upon the data generation that we will have executed during the year and our readiness for FDA clearance. So big opportunity to attract interest in the 2026-27 timeframe and beyond. Okay, so in terms of the funding round, we're doing a 2.5 million raise. We have 2.2 million of firmed up interest in that raise. The MedTech Syndicate are leading the round. We have a EIS relief of 50%. We have a 6.9 million non-dilutive grant, which is secured but not yet spent. So that makes our 5.2 million pre-money valuation very attractive because it's being impacted not only by the EIS relief, but also by the non-dilutive grant funding, which will come in and match all of the R&D spending that we are doing. In summary, Galenband has developed a working ECG device, which is clinically proven in clinical trial. We have established a clear regulatory and reimbursement pathway. We have a very scalable business model. We have an experienced team which are eager to execute, and we would warmly welcome your support as we build a business with a very significant exit opportunity. Thank you very much.
Gentlemen, thank you very much indeed. Lovely presentation, and yeah, very good. It sets it out very nicely. Thank you very much. You might unshare your screen now, Oisin, thank you. And there's a number of questions that are in. So there's two here I see regarding patents and the strategy. I'll kind of merge the two together. Can you comment please on regarding your patent strategy, the report on the applied for patents identify inventive step as an issue, and basically the other one is just asking what other IP is in the business as well. So IP and patents, perhaps you could just briefly go over the strategy there for the business.
Yeah, okay. So yeah, obviously, you know, the process of going through a patent, examiners review what you've got. They will come back with feedback in terms of novelty, inventive step, and so on. There is a well-worn process of engagement that then happens. You go back, you counter the points that they've made. So we're in that process with the examiners. I've gone through that process several times. I hold several patents separate to this, and you know, our feedback from the IP lawyers that we're working with is that we are in very good stead with these patents. Some of the responses may not yet be publicly available that have gone in, so we're not worried at all around that kind of inventive step part of it. And then separate to that, you know, we have a very clear plan around building additional patent protection as we go. And there's also an element of trade secret to this, you know, with electronics, as is also the case with software. You don't always reveal everything that you're doing, all of your IP in a patent forum, because you're then telling people exactly how to do it. So we have a lot of electronics which are not covered in patents, and those are those are basically trade secret, and that's the approach that other medical device companies tend to take.
Great, thank you. And I have a great question in from an investor. What inspired you to develop Galenband, and how does it address an unmet need in cardiac diagnostics?
Yeah, I can take that one. I mentioned a little bit in the pitch, so I can expand on it. It's just personal experience of this issue of current technologies that exist today not monitoring for sufficient periods or requiring interaction and the symptoms now missed. Really, long-term continuous monitoring is the only way to capture intermittent symptoms with any reliability. And the only way to do that at the moment over extended periods is with a surgical implant. So something like Galenband is as Eddie mentioned in the pitch, it's bridging an existing gap between the short-term devices that work today and surgical implants that just aren't really scalable. So that's the reason.
Very good.
Great, thank you.
You mentioned the need for a closed loop at the start of your presentation for wearables. This is where I think you have to put both hands on there or do it with your watch. Are you able to share a bit more of how you solve this issue with a single armband location, and how unique is the approach?
Yeah, Oisin, do you want to take that?
Yeah, I can do. And yeah, a little bit is probably delving into electronics that we might not disclose at the moment. If you put a conventional ECG device on the arm, you'll notice it's quite challenging to get any kind of signal at all. So we've done an awful lot of work on the electronic side to maintain a signal that has a very high signal to noise ratio. So we get a very clean signal from the upper arm without needing a closed circuit to be formed, and that's all down to the electronics inside the device. So I probably won't get too much more specific about that if you don't mind, but
maybe one thing for me to add there is, obviously the exact magic of how we do that is commercially sensitive, but we would be happy to talk individually to the person with that question to dig into it a little bit more.
Absolutely. Okay, and we may well introduce you to them to have a one-on-one. Sure. And that applies to any questions as well. And if you as an investor want to have a one-on-one or one-on-two even with Oisin and Eddie, we're very happy to facilitate that over another Zoom call at some point in the future. So please do get in touch with us. Melissa, over to you.
Sure, yeah. Another very good question from an investor is, can you explain in more detail why implantables are not the answer for all patients?
Yeah, okay. So there's a couple of reasons for that. So the first fundamental reason is that an implantable requires someone to be obviously cut open and a piece of machinery put into their body. A lot of patients, don't want that. And there's actually quite a high refusal rate in post-stroke patients for that process. Then you have the issue of cost. So at up to $30,000 in the US, they are extremely expensive. And people with their copay with insurers also have to shell out themselves as part of that. And then there's an interesting thing in the post-stroke setting specifically, where a patient is in the care of a neurologist after they've had a stroke. And a neurologist can prescribe patches and other cardiac monitoring devices. But they have to and typically if those come back with a diagnosis, the patient is handed to cardiology to deal with their AFib. But in the case of a implantable, the patient would get handed off for diagnosis, which is why you then have a big waiting list, because there's a lot of coordination that has to happen to now hand over to a different discipline. And that's why the mean waiting time is 51 days in the US to get an ILR, which if you've had a stroke and you're trying to find out if you have AFib so that you can exit the 26% chance who have recurrence, you don't want to be waiting for 2 months to get your monitoring started properly.
Thank you.
Excellent. Okay, time for a couple more. Can you tell us about how you've gone about collecting clinician feedback, and what has that been?
Okay, yeah, we have been extremely fortunate. We pinch ourselves at times at the strength and depth that we have in our advisory board, particularly in relation to the clinicians who are working with us. And the 3 clinicians who are working with us, Mark Carlson, Michael McConnell, Ravi Rajalingam, they have all helped us to gain access to clinicians in the United States. And Ravi Rajalingam, who is based in Harvard and MIT, has specifically taken ownership of running a process of validation with clinicians. So he conducts structured interviews with neurologists and cardiologists around this device concept, the performance of the device, the data that we're getting, and validating that they would in fact use this and how they see it as valuable. And generally the feedback that they've gotten is people say, oh my God, if I could have a device which can give me a monitoring window from 2 to 90 days, it's a complete game changer, because currently I'm juggling 3 or 4 different options to get there.
Perfect. Another question coming in. What trends in healthcare make Galenband particularly relevant right now?
Okay, so well, AFib is costing healthcare systems, 3%, nearly 3% of all of their expenditure annually. It's exceptionally expensive, AFib and its consequences. And, governments are taking notice of this. There's wording being used in line with growing epidemic. Guidelines are changing, moving more towards extended monitoring, which of course is not all that feasible with non-surgical options that exist today. So things are trending in the direction of requiring a scalable long-term solution. And at the moment, Galenband is looking like it's well positioned to be the go-to for that kind of to address that kind of need.
Great stuff.
Perfect.
Okay,
Great.
Final question. We've still got time, I think, to get the squeeze this one in. You're targeting post-stroke, and you've mentioned that you've got a 600, I think, clinics in the US that you're trying to get to. Do you see any route to expanding this to pre-stroke, to general heart assessment, general health assessment related? Are there any other heart conditions that this can help diagnose? How much bigger could the market be?
Yeah, absolutely. So I mentioned when I was talking about the market that the intermittent arrhythmia monitoring market is worth 3.1 billion. So while we start with a 900 million slice of that market, which is the, one of the validation questions with clinicians was, which patients would you start with? And they always say post-stroke. But there's another 2.2 billion of intermittent arrhythmia monitoring to capture. Part of that would be people who have had a treatment for AFib and now you want to see, is it working, and check back. So that's one. Then you have the other intermittent arrhythmias like PVCs, tachycardia, and so on, bradycardia. So there's a bunch of others, and that basically unlocks that full 3.1 billion market without us having to change the device or the sensor. It's just about bringing in additional algorithmic capability to incorporate those into our reports.
Perfect.
That's a nice way of finishing up. Okay, Oisin, Eddie, thank you very much indeed. Melissa, thank you very much for your time as well. So guys, investors I'm talking to now, we've got 5 companies live on the site at the moment. Obviously, eStation being one and Galenband being another. Open for investments, already doing very well, and have got a lot of funding behind them. Both of them having VCs backing them already as well. So very much worthwhile having a quick look at them, and hopefully you will consider an investment. Both EIS, Galenband is at 50% EIS, and eStation is at 35% EIS. And if, as I mentioned, if anybody wants to have a one-on-one with either Galenband or with eStation, please let us know, and we'd be happy to facilitate that, of course. So thank you very much for your time, and goodbye, and we'll see you again soon. Cheers.